Hello everybody and welcome back to my channel. Today I want to be covering the S&P. There was a huge sell-off after Jerome Powell's speech on Wednesday, and I'm going to cover a little bit what he mentioned there, but also what's happened since and where I think the market will go. There's going to be some interesting data and information that I'm looking at to make some wise decisions in the market. So I'm going to go straight into it. I'm going to share my screen. Right. So we have a big sell-off across the board in the S&P 500. As you can see here today, as I'm speaking, we've seen a euphoric buy, I guess, from the dip. It makes sense, and I'll explain to you why. And then I'm also going to explain where I think we will go in the next few weeks and months. So S&P 500 dipped on Wednesday, fell on Wednesday and Thursday. Now on Friday, it's being bought up. It's being bought up for that Santa Claus rally I mentioned in a few videos a few weeks ago. And this is what it looks like. We had a retest of this area around 6,100, and then it broke this wedge, came back down, retested this area here around 5,850. And something interesting that I've noticed is there's a potential gap fill around 5,700. So 5,800 is being tested right now as a key support area. There's also a gap fill around this area around 5,700, maybe as deep as 5,650. That's something to note here. However, today it's being bought, and it could easily be bought up for the next week or two, creating that Santa Claus rally that the market was expecting. However, it could also resist around this area, come back down, lower dip, and then rise up higher. We will have to wait to see how the market reacts to this area around here, around 6,000 again. One of the worries I have, and one of the things I'm looking at the moment, is options, and I'll be covering that a little bit later, but I want to go right into the VIX. Okay, the VIX is very important here for you guys to start predicting where price will go in the next few weeks and months. So we had a huge rise on the VIX. This was a level I was mentioning over and over again in my Telegram group, that we have this 12 or 13 zone as a key zone of support on the VIX, and then we're going to see a rising VIX, which will bring a dip in the market. That's exactly what happened, and then we had a huge spike here, and this is one of the largest spikes in the history of the S&P 500, I think. And when I look at these statistics, as you can see here, yesterday, meaning Wednesday, because today is Friday, so 2 days ago, then it was August 5th, which was earlier this year, and then it was Feb 2018. This was a period where there was other factors here, but this year alone, we've had two of the largest VIX percentages within a day. So the rise of a VIX, or the volatility in the market within a specific day. Okay. So these are two spikes that we had this year. Crazy to have two of them in 1 year. Now, when we look at the VIX, we also have to look at, and this is what doesn't worry me too much about the markets, we have to look at how it's compared to the VIX futures. So January 25, March 25, and so on. We didn't see a significant spike here in these futures. It just appears to me like an event that just happened within a day, and then it's going to be coming back down very quickly based on the statistics and based on what I'm seeing here. I don't see any systemic problems. I don't see any issues with the markets overall yet. It's just some volatility that came in because a lot of traders are being liquidated, and I'll be covering that a little bit later based on the options and other factors such as margin that's been taken on by traders. And then when we look at the VIX in comparison to when we look at the VIX after these spiking events, where the market is, where the VIX is after a month, after 2 months, 3 months. Something that I noted was after a month, the VIX is actually down. Okay, every single time, 100% of the times, the VIX is down, meaning that maybe we had a spike 2 days ago, and then we're going to see the VIX dropping gradually. as traders and investors buy into the market in expectation that we're going to see a Santa Claus rally coming in before Christmas, and then probably a rising stock market in 2025. Okay. And then when we look at other data, that's exactly what we see. So there's spiking moments in the VIX, as you can see here, and then you see corresponds exactly with a rising S&P 500 after the event in the most of the time, based on the statistics I'm looking at here. So these are just flash crash moments. These are moments where I think institutions are probably just buying up straight away because they see opportunities created in the markets due to catalysts such as interest rates being reduced and so on and so on. One of the things that I am looking at though with S&P 500 is the breadth of the market. Are the large majority of the S&P 500 stocks showing a decline or an acceleration or an increase? As you can see here, it's been 14 days where the large majority of the S&P 500 has shown decline, more decliners than advances in the market. Okay, 14 days. This is now a record for the last 15 years or so. Okay. Previous ones were 8. This was 2018, 2011, 2008. So we're getting at a point now where not all the stocks are advancing, and also I'm noticing data where even if the S&P 500 is rising, there is an issue with not the large majority of stocks being down and then being carried by a small group of stocks such as Nvidia, Amazon, etc. on the rise. So that's another issue there. And we do know that around 30% of the market now is dominated by tech stocks, and that's very, very concentrated and something to watch out for in the next few months. Okay. But when we do look at the market overall, I'm looking at some statistics here. And when we look at PE ratios, they are down. When we're looking at net percentage of stocks at 52-week highs, they're also down. And they're at these levels where they're probably worth buying. Okay. And then we're looking at 10 days advance / decline line, again down here, very, very undervalued, and looking to essentially probably move up higher now. Okay. I think that's probably what's going to happen in the next few days. But they're all looking down here, moving down. Now, of course, these could move down even lower. But when they're at these levels, I think it's probably this kind of final dip before we get a rise in market 2025. That's my opinion. That's what I'm preparing for. And that's exactly what I'm seeing today with my portfolio rising again. My stock portfolio rising again today, Tesla, etc. And then when we look at the spiking moments, we have to look at what happens 5 days afterwards, what happens a month afterwards. As you can see here, 100% of the time, we see the S&P 500 rising again or being in profit after a month. So it's kind of a no-brainer that we're going to see S&P 500 around 6,000, 6,300, 6,500 in my opinion. This is something that kind of covers that statistic and shows why I'm leaning towards that side. Now, things to worry about in the market right now. One of those things is there are around 6.6 trillion worth of options due to expire on Friday, which is today. Okay. So that's something to worry about, but it's also probably the reason why the market will rally afterwards. Once these are all expired, we then see a rise in the share prices. Of course, we have to wait and see how the price reacts. Today, as I'm speaking, the price is higher. And I'm going to be covering a little bit on where I think it will go in the next few months and weeks, right at the end of this video. The reason why I think it's this inflation data, as this article mentions here, the Fed's preferred inflation report. It's the Michigan report here. This is all the kind of data that's come out today. This came out quite positive. So that's why we're seeing a rise or buying the dip. Now, when we're talking about the data, I also want to cover Jerome Powell's essentially what he said and why the market reacted badly. The first thing that he said was he said unemployment was not rising, so unemployment is good, but job creation is cooling off. Now, something that I'm noticing is unemployment is slightly rising since the lows of 2022. And I think we might be very, very close to a recession in the US. And that's one of my worries. I think that's what the market is worried about. As you can see here, when we see slight rise, then we get a recession, then a high rise in unemployment. Over and over and over again, this looks like a setup, which is very, very similar to this. Okay. When we look at unemployment, we also, or employment data and job numbers, we have to look at jobless claims. Jobless claims are very, very flat here. But then when they go above 250,000, I think that's when the market will be triggered. At the moment, they're around 2,000, 225,000, 230,000, which is a good level. Okay. So he was worried about jobs. And then again, when you're looking at jobs, you want to look at the SARM rule, which captures some averages of unemployment data. And again, we've kind of moved above in this area here now. And we are looking very, very similar to these other moments where we've had a recession in the US. Okay, so that's something to watch out for and be worried. I think that's why the market sold off. Now, it could happen within 3 months. It could happen within a year. We don't know. We just have to be mindful of this information here I'm providing to you guys. And then when we're talking about recession, we also have to talk about inverted yield curve or this inversion of the yield curve, 10-year minus 2-year. As you see here, this is something that's been forgotten, but it was triggered around August. And then, a few months later, we see a recession in the US. So is the recession coming in mid 2025? Potentially, based on this information. And also him mentioning that Trump's tariffs could have an impact or they might not have an impact. But I think they will have an impact in the US economy. There is some data that insurance is high at the moment, but consumer products such as electronics and clothing, etc., then they haven't seen a rise in inflation. So if you think about China, what does China predominantly produce for the US? Well, goods rather than services. So insurance is high because it's just high in the US at the moment. There are other factors there that I don't want to go into. But consumer products from China, if tariffs are applied, and cars as well, if tariffs are applied to these products that are coming into the US, then we're going to see inflation rising on both fronts, not only insurance, so medical and house insurance and car insurance and other services, but also consumer products. If that happens, then it's going to have a detrimental impact on the US economy. And there aren't many levers that they can use at the moment with interest rates being at 4.25%. So that's something to worry about, something to watch out for in I'd probably say Q1, Q2 of next year. You should be watching out for these early signs of a recession. Now, going into the end of December, what I want to say is I'd still think we're going to get this rise in share prices, and that's exactly what we're seeing today. So I think we had this final dip around the 21st, and now we're going to see a rise all the way into early to mid January, and then another dip around the inauguration, which is usually a time where the market sees some volatility as traders are worried about the impact of the new president coming in. That's all for me for today on this topic of the S&P 500 on the market and where it is. I do suggest that you guys go and follow and join my Telegram group. You can also follow me on Instagram and TikTok, where I provide bite-sized versions of this content. But the Telegram group is where I speak with members. There are 240 members there about these topics before I even share them on YouTube and social media. So go and join there. I share many, many setups there and ideas. but I don't provide signals and I don't provide financial advice. So you guys obviously can use information for educational purposes, just like these videos. They're all just for educational purposes and just analysis and insights that I have on the markets. Okay, that's it from me today. Also, don't forget to subscribe to the channel because more content is coming next year and better quality content. I'm building a team around creating the content so that you guys get the best content related to the markets every single day in the new year. Take care.